I am ready to go.
Yep, let's go.
I'm going to count to 3 and then I'm going to start, okay?
Okay.
Okay. 1, 2, 3. Good evening, everyone. Tonight is the May 26, 2020, and we are called to order to the Finance Committee meeting. So the first item in the agenda is the approval of the minutes from the May 12, 2020 Finance meeting.
I motion to approve the minutes.
You don't need a second.
No? Okay.
No second.
So any question or discussion?
Nope.
Okay, all
No.
those in favor of approving the minutes say aye.
Aye.
Nays, the motion carried. Next in our agenda is an item for public appearances from non-agenda items. Do we have anyone on the chambers? No? Okay. Next, we move to the Finance Director report. So, Misty, do you have anything you want to add tonight, or?
Yep. So there's a couple of big projects that hit milestones this week. So one is the audit So the CAFR was released last week, and you have the auditors here and a couple agenda items to share their report on how last year went. And then the other thing is the CIP. So the mayor's proposed CIP was released on the website on Friday. And then today the news flash went out letting people know it was there. And then we also email all of the neighborhood associations. We really do our best to try to make sure people know that it's available and it's out there. So those two projects have taken a lot of my time recently. And then I know there was the expectation that I'd have the COVID report for this meeting. Frankly, ran out of time to do that. So Julia asked me to give you a verbal update before I get the report done. I was working on the report today. There's not too many changes actually in the actual documents that are there already. Some things that we've learned relatively recently. So we've talked in the past about any aids that we can expect to get from, the state or the feds or the county. There's very little actually that will probably filter down to us. We still expect to get some FEMA money for public assistance. But the CARES Act and a lot of those other things, because of our population and being in a urban county, has made us ineligible for a lot of the programs. Either the state is doing something on their own with that money, or we don't know exactly what's going to come to us, or it went to populations of 500,000 or more, and then some other programs went to populations of 50,000 or more. So we're really kind of stuck in that piece. There is still some hope that maybe we can get some assistance. On the state level, they got a pretty significant chunk of money. There's a hope that maybe some of that will pass down to us. The stimulus 4 that the federal government is working on, we don't know exactly what's going to get passed or not, but likely there won't be any direct aid to us is my guess. But there might be some things included in there that could benefit us still. For example, if they allow the state government to use that money to backfill lost revenues, then it will be less likely that we will have to take a hit on our shared revenues that we get from the state. So while we might not get something directly, it could help us still in that respect. And then the WEC, or the Wisconsin Elections Commission, has a program out there. I know there's an agenda item out on your council meeting tonight. I'm hopeful that something there gets approved so we can get some aid from that perspective. But at this point, I'm hopeful, of course, but I'm not necessarily expecting it. The big areas where we will be hit on the revenue side, if you remember from the last report, there's 2 bar charts at the bottom that kind of talk about the susceptibility of our revenues to COVID-19 and kind of the effects of that. The biggest things would be state aid if it is affected, if they're not able to use the CARES Act funding to fill that gap, and the legislature chooses to fill some of their gap with the aid that they give us as a possibility. Building permit revenue, in theory, is susceptible, but our construction market has been going pretty strong still. So I'm hopeful that we'll be able to still hit budget at least, and we do budget pretty conservatively. So that should be okay. Interest revenue, as you know, the market is quite a bit down also. All of our callable securities have been called at this point, but all the rest of our money, our invested money, is in a ladder, which means that we invest, at certain rungs. So we won't actually get an impact on our interest revenue as significantly until a couple years from now, when the money that we're investing now is at a much lower rate. and it will become due later. So we're still benefiting from the higher interest of the stuff we invested 2 or 3 years ago at this point. But it won't be as high probably as what it's been in the past. But again, hopeful that we can hit budget at least. And then there's room tax revenue. CETA has already addressed a lot of that. So 70% of our room tax is passed on to the chamber. So we're really only susceptible to that 30%. And CETA has gone through their budget and reduced a lot of their discretionary items to really identify what their bare bones budget is. And they'll have to dip into fund balance a little bit, but it's definitely within a reasonable amount. So not overly concerned in that area either, even though it's a decrease. And then the senior programs and the rec programs and the shelter rentals is probably going to have a little bit more impact for us. Shelter rentals for sure is going to be a straight direct impact to us. Senior programs and rec programs, a lot of those are an 80-20 split. So for every dollar we collect, 80% of it goes to the instructor and we keep just the 20%. So if we're not collecting money, again, we don't have as much money going out the door. So the piece that is an impact to us is less than the whole amount of the budget. So it'll be a smaller impact, but still something. Some things on the expense side that we're doing. So we haven't done a formal hiring freeze because we wanted to look position by position. As you know, the public works director is vacant. That's a position we need. So we didn't want to do just a blanket hiring freeze, but we are looking at position by position. So just as an example, so the administrative intern that Pat, Mike, and I share, we're not hiring this year. And the planning intern wasn't hired, and there's some other positions that we're just holding off on. But it's not a formal across the board policy. And then we're not currently planning any furloughs for staff, but there are some positions that aren't utilized as strongly in their current job position. So we have reassigned them to other departments in order to kind of help fill that gap. But our goal and our hope is to not have to do any furloughs this year. So yes, my end result is overall, I think 2020 will be okay. We have had some additional costs, but a lot of it are things that we can shift the budget for that don't necessarily have a dollar for dollar impact, like the time spent on COVID for salary employees. You have to pay your salary employee anyways. It's just at a different task instead. I am worried though about the 2021 budget, especially if the shared revenues don't come in, or the state has to make decisions that will reduce those for us. I'm also concerned, so I think we will hit about a 6% net new construction, which is fantastic from a net new construction perspective. But I think the council will really struggle as far as an appetite. How much do you want to increase taxes, even though you're allowed to increase it that much? Do you want to? So I guess my guess, if I had a crystal ball, would be that we'd be pretty much a status quo budget for next year. Few increases, but hopefully not any significant service cuts. But we'll see as more things come known.
Okay. I have another question regarding, with the notes payable that the city has, can we, because the interest rates are going down, so we can refinance those, or can we, or?
So we can. We have done a couple of refinancing in the last few years.
Okay.
We get that every time. The problem is the bond market right now is relatively unstable. So there was a period of time where it was going through some turmoil. And there's some behind the scenes programs that the federal government has put in place to help stabilize that. And again, my hope, we're not planning to borrow till November. So I hope that we will be much more stable at that point, but you don't really know. The bigger thing is I need to borrow a lot of money this year to finish paying for Fish Hatchery Road and some of those other things. So we'll look at it, but the savings might be offset by having a much bigger issuance and not being bank qualified anymore. So it's something we'll definitely look at, but I wouldn't count on it necessarily.
Yeah, okay. Okay, no, good, thank you. I am asking the question because I have some, residents that they're reading what happened in Madison, another municipality, and they want to be sure that we are not going to have a deficit hole in our budget for next year, and if we are not furloughing people, you know what I mean?
Right.
So
we have a very different, I'd say, revenue structure than what the city of Madison has too. So they get a lot of money from parking in their ramp and, CDBG funding and things like that. So they have a lot more opportunity. There's a lot of programs that they can do that we can't because we don't have that money coming in. Yeah. But it also makes them more susceptible to something like this if they have more user fee base.
Yeah. Okay. Any other question for Misty?
Not for me. That was very thorough. Thank you.
Of course.
Okay. So next in our agenda, we are going to review our bills. We have a detailed review of the check for $10,000 and above, dated May 1st, 2020 to May 15, 2020, totaling $106,000, $759 with 35 cents. Do we have a question there?
I have a question, Julia.
Okay, Randy.
Can there be a further explanation for the $51,835.74 expense with the hotel room tax payment? Maybe Misty touched upon that earlier.
Exactly.
Yeah.
Yep. So that is the 70%. So under state law, which was changed relatively recently, of all of the money we collect for room tax or accommodation tax, 70% of it we're required to give to a designated tourism entity, which in the city of Fitchburg, we've designated the Fitchburg Visitor Chamber and Business Bureau to be that entity. So 70% of what we collect has to go to them under law and under contract.
So is that will that be monthly then? Or, I mean, obviously that dollar amount will be different, but.
Yep. That's quarterly.
Quarterly, okay.
Mm-hmm. And so if you look at this payment, this is not too much different than what first quarter is in other years. It is a drop, but it's a calendar quarter that we're looking at, and the COVID really hit kind of mid-March. So the impact on this revenue stream wasn't quite as much in quarter one as what it will be in future quarters.
Yeah. Okay, so going forward, that amount should be significantly higher.
Should be less, I would guess, because I guess it depends on how the hotels are doing, but it's based on the taxes that the hotels are collecting and give to us. So if the hotels are either closed or don't have as much people that are renting rooms, then they won't be collecting those taxes and won't be remitting it to us, and then we won't be giving it to the chamber.
I understand, but if you said that this was first quarter, then we have second quarter to go through yet as well, and we had a lot of stay at home during that second quarter as well. Am I misunderstanding?
I'm actually having a hard time hearing the clear.
Okay, first quarter, you stated that this 51,000 was for first quarter. Is that correct?
Yes, yep.
Yes. Well, we also have second quarter that we're not reporting at this point in time, but stay at home affected second quarter just, if not significantly more than first quarter. So we could see a significant increase above this 51,000 as well in the next reporting.
No, it would be less, because we would pay them less if the hotels were impacted by COVID and had lower room stays, then we would get less money in and we'd pay less money out to the chamber.
Never mind. Thank you.
Yep.
Okay, any other question? Okay, next we move to the detailed review of all check issued, check number 120810-120878, dated May 1st, 2020 to May 15, 2020, totaling $189,158 with 88 cents. Do you have a question?
I have one question. This is Gabriella.
Okay.
Page 11, the Nine Springs Golf Course payment. I'm curious about that.
Yep. So the city subsidizes the Nine Spring Golf Course. So the management contract that we have with the private company is that they get to keep all of the rental fees and everything that's generated, and then we subsidize them $50,000 per year, spread out over monthly payments. And that contract, I believe, is a 10-year contract that was just approved. Right, Julia? 10 years?
Yeah, because we changed it, yeah.
Mm-hmm. It used to be $30,000.
Yeah, we increased it, yeah. It is cheaper for them to run the show that if we have to, Gabriela, if we have to do it, the city had to do it. It is a partnership with them, so. I have a question, Misty, regarding the, now I forgot where it is. It was a solar training for 550. What is that? I don't remember where.
Yep, that was in the fire department. So the
Okay.
department does monthly training drills, maybe even more often than that. They had a special one where they had a solar company come out to basically teach them about the nuances with solar as how it relates to their experience with fires and how to best serve those.
Okay. Any other question?
Yes, Randy. I see a number of entries for volleyball league refund. Are these employees that have contributed to a volleyball league, and you're refunding the money because of the season? There's just so many of those entries. I'm just curious.
Right. So it's not employees. It's a rec program.
Yeah.
So back when we collected the money, we thought we would be having a volleyball league. Everything was canceled for the summer, so we refunded everybody their rec program fees.
Okay. Thank you.
The exception would be some of the rec programs went to an online format, so there'll still be some rec revenue, but most of the rec revenues were all refunded. So you'll see that in here, and then in the P cards next month too. There's some pretty big ones in there.
Okay, very good.
And also you can see there are a lot of refund for the park shelter rental too.
Exactly.
Right.
Same thing. So we did not allow shelter rentals for the summer, or for at least the beginning of the summer. So they were all refunded without penalty. So we figured it wasn't necessarily their fault that we were closing. So the city just refunded it all in full.
Good policy. Yeah. Thank you.
One more from me. The page 14 of the packet, the reset 2 monuments. I'm curious what monuments were.
The city owns a cemetery. So those were 2 monuments that were knocked over and needed to be reset.
Oh.
Where is the cemetery? I've never seen it. I don't know how I missed that.
Yeah, you know what? I have never seen it either, but it's Fund 227. That's about the extent that I know. So, Scott Endel, the parks director, he's also a sexton. Isn't that the name when you lead the cemetery? So if you're interested in buying a plot from the city cemetery, you'd reach out to him.
Oh, very cool. Thank you.
Yeah.
Yeah, he can give you the tour. Okay, so next we are going to review the P-card transaction for the cycle ending April 6, 2020, totaling $91,817 with 65 cents. Do I have a question? No? Okay. No question. Okay, so next we are going through the action item, and the first thing in our agenda is the 2019 audit presentation. Do I need to have a motion, Misty?
No? It's just a presentation.
So tonight we have here Baker Chile. Richard Cross is a city auditor, TPR firm, and with us we have Andrea Jensen and Vasily Joseph. Okay, so they are the auditor. Welcome. So.
Thank you. This is Andrea. So I'm going to kick things off. Just thanks again for your time this evening, and thank you for allowing Vasvi and I to join you remotely. I'm going to make a couple of general comments before we dig into the financial highlights that we prepared for the meeting. And then if there are questions, we can take those at the end. So you should have received the 2 formal audit reports. The one that Vasvi is sharing on your screen is the reporting and insight report. This has a whole new format compared to previous years. I think we would have called it the communication report in previous years. I would say it's best viewed in electronic format because there are a few links within the document to take you out to our website and different other reference material for you. The one area I'd like to point out from this report is related to internal control matters. We did not identify any material audit adjustments during our audit this year, which is not an easy thing to do. I think that should give you a lot of confidence in the information that you're getting from your finance department. Misty and her staff do a really, really nice job in their audit preparation and assisting us with all our questions as we go through the audit process. And so, we very much appreciate that preparation and the assistance that we get from the finance department. The other more formal report, obviously the city's CAFR, or the Comprehensive Annual Financial Report. This is the 5th year, I believe, of the city submitting as part of this award program. So it's a really impressive document. It is a big document, but if you haven't ever taken a look at, particularly, I would say, the letter of transmittal, the MD&A, and some of the statistical information in the back, I think there's a lot of valuable information in there, and I would just encourage you to take a look at that. What Vasfi has on the screen right now is our report on the city's financial statements, and as in prior years, we did issue an unmodified opinion, which is the highest level of assurance that we can give. And then I think the rest of our time, I think we will spend on the financial highlights, which is just a report that we pulled together for purposes of the meeting without having to page through the large financial statement document. It really summarizes some of the key metrics that we think that you should pay attention to. So Vasfi's going to kick us off here. Are you on mute, Vasfi?
Yeah, I think we hit Alt-A. That might take you off.
Okay. I was trying to click on that mic and it wouldn't work with the screen sharing. So thank you, Misty.
No problem.
Okay, so the first couple pages I have, first of all, I'm Vasfi Joshi. I'm a senior manager in charge of the city's audit. Work with Andrea in the Madison office. So the first couple pages I have in this presentation is, of course, related to general funds results, because, that's one of the main funds of the city. And, people are interested in knowing how did the general fund do, what was the activity and how did the balance compare to last year. So the top of the graph here, we have, it shows the comparison to prior year. So the green bars are 2019 numbers and the black bars are last year's numbers. So as you can see, the general fund's fund balance went up quite a lot compared to last year, close to about 2.2 million. And here's the comparison of actual to budget. And as you can see, the city had budgeted fund balance usage of about 491,000, and it ended up positive 2.2 million. So the main reason was the revenues, were up compared to budget. And mainly the permits revenue were up about $1 million, and investment income was up about 300,000 compared to budget. And on the expenditure side, there were almost all departments, there were savings for almost all the departments, and that's how there was a net positive change, or increase in the fund balance of about 2.2 million. And the fund balances, there are like different categories, and that is defined by governmental accounting standards. And as you can see, the bar here shows all those categories, and the strictest one, the first one, is the non-spendable fund balance. And what it means is that, that fund balance is tied in some type of assets that is just not in a spendable form. So about the 880,000, or 775 that's in there, at the end of 2019, is made up of like prepaid assets or long-term advances. And there were about like 500,000 of advances made to the newer TIFs, because the TIFs just, they don't have that money. So they are using general funds cash. General fund is advancing money to them in the initial stages. So that's what makes up that $775,000. It's just not in a spendable form. And the city had really small amount in restricted fund balance, and then the assigned fund balance was about 3.4 million. And what that is just money set aside by the city for specific purposes. And the largest amount included in there is about $1.7 million that's assigned for sick leave liability. The city pays their employees, on retirement. And so city has set aside about 1.7 million for that liability as of 12/31/2019. And then there is also additional balances assigned for subsequent years' budget and so on and so forth. And if you want to look at the details of what makes up each of these categories and the details of the amounts, I think they are on page 52 of the financial statements. The next page shows trend information of the general fund's unassigned fund balance. So as you can see, whatever remains after non-spendable, restricted, and assigned is just the free available fund balance that the city can use for any purposes it chooses for. So if you can see the trend information, it shows the comparison of the unassigned fund balance compared to general fund's annual revenues. And it's the city's policies to keep this ratio within a range of 15 to 25% of general fund's revenue. And as you can see, the city ended up being at about 30%. And the bond rating agencies, they recommend about 30%, to get a AAA rating. So that even though the city's policy is between 15 to 25%, it's nice to hit that 30% target to qualify for that AAA bond agency rating. And the trend information you are seeing, there was a slight dip, or there was a dip in 2018, and that's because that's when the city changed its assigned fund balances. So 2018 was the first year when the city started assigning fund balance for the sick leave liability. So that's why there was that sharp dip. And then, city made it all up in 2019 because of all those savings, compared to budget and increase in permits revenue and investment income. So, right back up to about 30% again. Government Financial Officers Association, or GFOA, recommendation is about no less than 2 months of general fund's operating revenues. So that comes to about 16%. And as you can see, city is like way above all of those ranges. So very healthy, positive looking fund balance. This is a trend information of the city's general obligation debt. So as you all know, the utilities are debt free. So all of this general obligation debt is on the city side. Utilities don't really have any debt. And the 3 trend lines you are seeing at the very top line, the black trend line is that shows the legal debt margin. So as per the Wisconsin state statutes, a government cannot have more than 5% of total equalized value in its general obligation debt. So a city's general obligation debt cannot exceed more than 5% of its total equalized value for that particular year. So that's as per the Wisconsin state statutes, but the city has a debt management policy where it says, even though Wisconsin state statute says 5%, we're going to go even stricter, even down. We're going to say no more than 3%. So that's what the middle green, trend line is. And as you can see, the city is way below, within both of those limits. That's the bottom green line. So the actual percentage of the statutory debt limit was at about 28%. And a lot of times, all the municipalities are interested in knowing, how do we compare? Okay, this is great, this is our trend information, but how do we compare to the rest of the municipalities our size, in our county or in another county, but with similar population? So if you want to look at the comparative metrics information, here's where you can find them. So if you just click on them, there is an option to.
You actually have to, there's a little technical glitch here. You got to take that trailing number off of the, so if you click on the link and then go to the address bar.
Oh, okay.
Just delete that out. I don't know why that appears, but that will take you to where you need to go.
Oh, sure. Yep.
Little trick for today.
Yeah. Okay. So yeah, and this is where you can go, and then if you can, click on that, then you can just filter it. You can just do comparison by county, and that's where if you want to look at everybody in Dane County, this is where all the communities are, and then you can see this is where city of Fitchburg is. So, and it shows that the information is like a year or two behind because it takes them a while to collect all the data and upload them. So the latest information is 2017, but still gives you a pretty good idea of where you stand. So, okay, so then back to the next page, which shows some more trend information for debt service to non-capital expenditures. And again, this is a comparison between, the city's trend versus the communities that Baker Tilly audits within the same population range. So again, the city's trend is positive, better than most of the communities your size. And in this comparison, I'm not including certain debt if it was prepaid, by a TID. So for example, like this year, 2019, the city's actual total debt went down by about 2.6 million or something. So the city borrowed about 9.5 million, but then repaid about 4.7-ish on a regular repayment schedule. But then the TID 4 had additional money, and the city prepaid about 7.4 million back. So I'm not including that 7.4 million in this calculation because that just skews, that's not the true debt service that the city owed. It just happened that the city had, or the TID had more money and it paid. So I'm taking all that data out to show like a more consistent comparison from year to year. So still a great positive trend there. So I'm gonna hand it over to Andrea to talk about some utility slides now.
Yeah, so just a few comments on the 3 utility funds, the first being the water utility. At the top of the slide, you will see the actual rate of return compared to the authorized rate of return. The actual rate of return of 3.9% is very similar to what it was last year. And just as a reminder, the authorized rate of return, that is authorized by the PSC of Wisconsin. So the water rates, the rates that you charge your customers, those haven't changed during 2019, and those would need to be approved by the PSC if you're going to do any rate increases. So the chart in the middle is your operating revenues compared to operating expenses. I would say overall just really consistent with last year, a slight dip in both of those numbers, but kind of the margin there is very comparable to last year, so really no concerns. The information on the bottom, we take a look at the unrestricted cash reserves for this fund. I think a minimum number of months on hand, we would say bare minimum would be about 3 months on hand, but the utility is at about 20 months on hand. So very healthy cash reserves, and that just gives you, the ability to continue debt-free in those funds and have a little bit more flexibility with the projects that you want to do. Then the next utility chart that we're going to look at here is the sewer utility. Same information here in the operating results. We're looking at the operating revenues are in green, Operating expenses are in black, pretty close to break even this year, which is very similar to last year. I think something to probably just keep an eye on for the long term. And then similarly here, we would look at the unrestricted cash reserves. Here we're at about 3 months of cash reserves on hand with 704,000, roughly 705,000 at year end. Again, just something that you'll want to keep an eye on as you think about the projects that you have kind of coming down the road, and maybe looking at building those unrestricted cash reserves up a little bit. Finally, the stormwater utility results. This one we have operating expenses are slightly above operating revenues. This isn't really due to any significant one-time things that I could see. The depreciation for the fund increased a little bit in 2019 compared to 2018, but that's a non-cash item. So that does show up in your operating results, but really is not a cash item. And then unrestricted reserves here, you're at about 2.6 million in unrestricted cash at year end, or 25 months on hand. So this fund has a really healthy cash reserve. So, just keep an eye on those operating results year over year, but no significant concerns here. So I think that takes us to the end of what we had planned for comments. Overall, again, really healthy financial results for the city as a whole. No major concerns with the numbers, no concerns with the audit itself. And if there are any questions, we'd love to answer those for you.
Julia, you're on mute.
I'm gonna have a question, and then I know Gabriela and Randy, if you have any question, let me know. One of my questions is on page 12. You mentioned page 12. I don't know where is that page 12 now. No. Could be page 12 of the, yeah. 1 second.
Julia, maybe if you ask the question, we'll know which document it is and can.
Yeah, it talked about it was about internal control, and it was talking about decentralization of the cash collection. I want to be sure it was an issue, it's something that we need to improve as a city. There, what page is that one?
It's page 57 on the
speak
packet.
a little bit on this. So I would say this is a point that we like to include in most of our reports for municipalities of your size. It's just a reminder, I think a good reminder that, we're auditing the financial statements and making sure that they're materially correct. Now, that doesn't cover a lot of the smaller departments that might be collecting cash. So it's possible that if you don't have good controls at those decentralized cash collection points, that there could be issues there. So this is more of a reminder point, if you will, and just some examples of things that you can do to help limit the exposure there. I would say that I've been involved in the last several years. The city has done a number of, consulting studies outside of the audit with us that have done a little deeper dive into some of these departments. For example, in 2019, we looked at the municipal court and provided some recommendations there, and Parks and Recreation the year before. So I do think the city is taking some steps to protect itself here, but it is a good reminder point.
Okay. Any other question? You mentioned about GASB 84 in the report, and are the changes that we are seeing in so we can see those GASB 84. Can you explain for the rest of the team what are the new things that we are going to see in the financial, and that one is what does it mean? You know what I mean? What this standard in general means.
So if I may, if we could keep it to a 2-minute at most, because we do have a rest of the agenda in 15 minutes.
Sure. GASB 84, Vasquez paging to the new schedule. It essentially put an income statement to your tax collection fund. So in previous years, you had always reported what were the cash collections that you had on hand that related to your overlying districts at the end of the year. This new standard said, well, yeah, we want to also know how much money is running through the city related to these overlying districts. So that, I think that was kind of the push for this schedule. And so you'll see that now you can tell that there's $31 million running through the city in 2019 related to the overlying districts. Yeah, and it pulls it into the basic financial statement. So it is something that we had to audit, which changed our effort a little bit.
Okay, any other comment?
I just have one more comment. I actually do have some questions for you, Misty, but we can take it offline. And it's mostly related to the comprehensive annual financial report. But I just wanted to say thank you to Baker Tilly. I thought this was a really easy, list of top-line information to absorb, especially someone that's new to the finance committee. So I appreciate that. And Misty, I've been since I started, been very impressed with the work that you've done, you and your team do. And the comprehensive annual financial report is absolutely fascinating, and it has so much good information in it. And I feel like I need to spend a lot more time with it to really fully digest it. But I would recommend, if anyone's interested in the finances of the city, that they should check out the report, because you will learn everything that you could possibly want to know. But yeah, I'm going to follow up with Misty on some questions I have that can be offline.
I would agree and echo Gabriella's comments. Thank you to Baker Tilly and those of us that do enjoy finance. It is something you should pick up and read. It is interesting and fascinating. Everything you want to know. Thank you.
Okay, so thank you very much, ladies, for the presentation. And see you next year.
Sounds great. Thank you.
Thank you.
Okay, bye.
Yeah, have a good night.
Bye. Okay, so next we move to, I need a motion to approve resolution R-83-20, authorizing acceptance of the proposal from the AE2S to conduct a stormwater study for the Fitchburg Road and Goose Lake.
A motion to approve resolution R-83-20, authorizing acceptance of proposal from AE2S to conduct a stormwater study for Fitchburg Road and Goose Lake.
Second.
Any question, Misty? That one is from the Goose Lake.
Yep, so last time you'll remember you approved an intergovernmental agreement with the town.
Yeah.
This is now the contract that we're able to sign because we have that higher dollar intergovernmental agreement. So they went through the public, not the public bidding, but a quoting process in order to get a variety of vendors to apply. And then staff is recommending what they believe is the best qualified vendor.
Yeah, my only question that I was surprised that this vendor is from North Dakota. I am expecting that we need to support more Wisconsin company, and I think we have, I don't know. I would like to know why it was that one compared to the other one. We don't see that part, but so
right.
Okay, so this is what the question was, why? Because they mentioned they was the most qualified, but for me, like I don't have an engineer degree, I don't know what it means it was the most qualified. You know what I mean? What does it mean, the most qualified?
Right. And I can follow up with Claudia, who was the person that coordinated this contract, and see what the scoring criteria was that the city and the town went through to select this firm.
Okay, so any other question?
Nope.
None.
All those in favor say aye.
Aye.
Nays, the motion carries. Next, I need a motion to approve resolution R-9820, authorizing acceptance of the 2020 chip sealing program bid.
I move to approve resolution R-98-20, authorizing acceptance of the 2020 chip sealing program bid.
This one is something that we do every year, so it's pretty common. So we are accepting the lower bid. So we have the map with the road that we are gonna do chip and seal. So it's a very what is a normal procedure? This we do it every year. So any question?
None from me.
Okay.
No.
All those in favor of resolution R-98-20 say aye.
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 No. Motion carried. Next, I need a motion to approve resolution R-100-20, approving a design contract from KL Engineer for the design on the CTHMM McCoy intersection and signal improvement.
I have a point of order question. I'm happy to make a motion for the resolution, but when I make the motion, do I need to repeat the whole title?
No.
No? Okay.
So reference the resolution number,
Just
but
the
you don't
resolution.
have to read the title.
Okay.
Yeah, I read the title and you, yeah.
Got it. So yeah, I will stop repeating the title then. So I'll make a motion to approve resolution R-100-20.
I'll second.
So, and this one is, I don't know, Misty, you want to go, but this is another project that it was in the pipeline for a long time.
Yep, so this was a CIP project. This is an intersection down on MM and McCoy, which has some needs there in order to make it safer. The great thing is Public Works applied for a highway safety improvement program grant, which was successful. So we're able to get a much more improved intersection for about the same cost as what we had planned before. The difference being that they'll pay the grant will pay 90% of the construction cost. The city has to pick up more design costs because that's not an eligible expense, and the design will obviously be more expensive for a bigger project. But at the end of the day, the project will cost us the same for a much better end product.
Okay, so how much is gonna be this design? And where is that in the? Okay.
The pre-approval is for $107,000,
Yeah. Okay.
and then
But then is
the
it?
county and 1/3 us.
Oh yeah. Okay. Yeah. That one went to. Okay. That we split this with the county.
Correct.
Any question?
Nope.
All those in favor of resolution R-100-20 say aye.
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 Nays, the motion carried. Next, I am looking motion to approve resolution R-104-20, purchase of the 2020 F550 dump truck equipment.
A motion to approve resolution R-104-20.
Okay, so Misty.
This is part of our equipment replacement in the Public Works and Parks Department. The unique thing about this one is the price did come in a little bit more than what they had budgeted for, but their plan to account for that is there's a ball groomer that's also up for replacement this year, and they'll reduce the number of options that they will put on that piece of equipment. They can be added on at a later date if other things turn out to come in under budget. And then also the sale price, they expect to get a little bit more for the old piece of equipment than what they originally budgeted for. So between those two items, they can account for that additional cost. But it does require a 2/3 vote because we're using additional sale proceeds revenue to pay for an additional expense.
I have a question. And I did read that. Is there an anticipation that it's likely that we will go over budget slightly, that we will end up having to pull some from our reserve in order to pay for the overage, or we expect that it'll be a net even?
Yeah. So the CIP is a relatively large project with a bunch of different pieces of equipment in there, and they think that they can accommodate this overage by an underage or a not buying something else. So no need to tap into reserves or anything like that. It should come all out in the wash.
Sounds good.
Any other question? Why is a direct referral?
Time sensitive, so it's a piece of equipment that they need to get in, and there's a.
All those in favor of resolution that R-104-20 say aye.
Aye.
Nays, the motion carried. Next, I am looking for a motion to approve resolution R-105-20 authorizing a taxation district to waive interest and penalties on property tax payment installment due on or after April 1st, 2020.
I move to approve resolution R-105-20.
Okay, Misty, what is this?
So this is that item you've heard me talk about the last couple of meetings where we aren't technically changing the due date, but we're delaying when interest and penalty will start to kick in from the current installment is due on July 31st. Interest and penalty won't kick in until October 1st. So in order for this to happen, the county had to pass a resolution, which they have. And now this is our resolution to kind of to parallel with that. And I would say our timing is impeccable because in my mail today, I got a little flyer from Dane County that talks about whether or not we will be doing it. So I expect tomorrow my team will get a lot of phone calls. So now we will have a good answer for them. So timing works out for me for once. I'm very happy about that.
Yeah.
But as far as impact, so yes, there is a small impact to us. Our settlement, which is when the county basically buys back all of our delinquent property taxes, will be delayed a month. So we won't earn interest on that for a month, which will have a small impact to us. But from a cash flow perspective, I'm not really concerned. And the actual interest and penalty that people would have to pay otherwise, Dane County keeps all of that because they do the collection of this installment. So there's no real direct cost for us there either. So while there is a minimal effect to us, I think it's the right thing to do considering the circumstances. The one other big thing to point out is that we, by this resolution, are just doing a blanket across the city determination that we have financial hardship due to COVID. We don't want to do a case-by-case basis, just the administrative burden and just the opportunity to open up for why you picked that person versus that person. So we're just doing a blanket across the board. COVID is affecting everybody. Let's give someone relief.
Good.
Okay. Any question?
That sounds great to me.
All those in favor of resolution R-105-20 say aye.
Aye.
Nays, the motion carried. Next, I am looking for a motion to approve resolution R-10A-20, authorizing a budget amendment to transfer $150,000 from the Fitchburg revolving loan fund to capitalize the Forward Fitchburg Business Boost Loan Program and guidelines.
I move to approve resolution R-108-20.
So
I believe Mike is there.
is Mike here? We have 6 minutes. I don't know if we want to,
I'm okay, like, saving the discussion for council. I'm, like,
Okay.
I read through the packet. I don't know if I have any, I don't have any particular questions for this particular committee.
So the committee could choose either to take action on it without much discussion, or you could actually choose to not take action and just send it to council without a recommendation from finance. So at this point, we have a motion to approve on the table.
yeah. So I want to tell you in 1 minute, we have a CEDA meeting this morning where we review, we have a couple of changes to the application. This is a great thing for the city of Fitchburg, to our small business. They are struggling right now. We have $150,000 in revolving door that we are going to convert that to another loan program. So I hope that you've seen all the detail in the application package. We can have the question and council. I can explain the changes, and Mike can explain the changes that we made to the application form today, this morning, but I don't know. It's up to you guys. I am pretty confident about it.
Yeah, I mean, the packet was quite thorough. I do have some questions, but I think that I was planning to ask most of them during council, because I think they were less about the finances and more about the specifics of the program.
I'm fine with taking it to council. It's just that the motion's out there. I don't know, how do I withdraw that motion?
So, but we need to, so do we don't want to take any position? What do we need to say, Misty? We need to.
So either we could, if the committee feels comfortable, we could take a vote on it, if you feel comfortable with that. Otherwise, Randy could withdraw his motion, and we could take a different motion to send it to council without any recommendation.
I am comfortable voting to approve, personally.
Okay.
Okay, that's
You,
fine.
Randy?
I'm fine with that, yes.
Okay, so let's approve it and then we make all the question in council.
Because this is just a recommendation. This is not
Yeah.
technically an
Right.
action. I mean, it's an action.
I just want to know protocol, that's all.
Okay, all those in favor of approving resolution R-108-20, say aye.
Aye.
Aye, the motion carried. Next, I am looking for a motion to approve resolution R-1110-20. Is a revision to the state municipal agreement to McKee Road and Commerce Park to Seminole Highway.
I move to approve resolution R-110-20.
We need a second.
Second.
No, we don't.
No? Okay.
We don't need
I didn't.
Okay. So, Misty, what is this? This one is, my question is, are we receiving more money from
Exactly.
federal? Okay.
Yep. So this is one of the few times the finance director is super happy about a project where we're getting extra money from the government. So there was another project in the city of Madison that is not able to use their funding, so they're going to give it to us instead. Happy day.
Okay, so we don't have anything to discuss here.
It sounds great to me.
Do you have any question, guys, for this?
No, no questions.
Nope.
All those in favor of resolution R-110-20, say aye.
Aye.
Nays, the motion carries. So we are at the end of the agenda. So the next item is announcement. Our next regular meeting will be on June 9th, but then on June 8th, it's a Monday, is the CIP presentation to finance meeting. So we have to be, it's a mandatory meeting for the finance committee, but also I would like to invite we need to invite all our elders to this presentation. So do you have any question, any comment, Misty?
Nope. And then we'll also talk a little bit more tomorrow's committee of the whole. You get to hear me again about some more
Yeah.
CIP stuff. Lots of finances.
Okay. So thank you, Misty. Good job in your the audit. It's always great to hear the auditor saying that they don't have any concern.
Right?
So I want to congratulate you and your finance team for the work that you do during audit time. It's good to have that comment. So the next, I am looking for a motion to adjourn.
Motion to adjourn.
All those in favor of adjourning the meeting, say aye.
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 Nays. We are adjourned at 7:29.